All right, fantastic. Well, I'm pleased today to be here for another episode of the InsurTech Leadership Podcast with Wayne Slavin. He is the CEO and co-founder at Sure. Welcome, Wayne.
Thanks so much for having me on.
Yeah, absolutely. So, Wayne, let's jump, straight into it because it seems like you guys have had some, interesting evolution since we last chatted. So, just to set context, we're in an environment where insurance has never had more pressure to move faster. Customers are expecting kind of instant embedded experiences, Amazon-like customer service. Carriers are still dealing with a lot of legacy tech. And now, AI continues to evolve and, AI agents are starting to show up in all sorts of different capacities with the promise of running workflows end to end. Differences insurance isn't like retail or travel. You got a highly regulated industry. Consequences of agent activities are real, and all the plumbing underneath is still complicated. So, it sounds like Sure has built, itself around a pretty specific point of view, and I'd be curious to kind of get your take on what that is and how it's evolved in the current environment.
Yeah, we've got a couple points of view on a couple of different pieces of let's call it the supply chain in insurance. And the first, which I think is probably the least controversial, is that our hypothesis is that the next 10 biggest distributors of insurance are not going to be insurance companies. It's going to be Fortune 500, Fortune 100 brands that already have the consumer in their product and in their ecosystem. Therefore, they have a structural advantage around customer acquisition. And as we know, in insurance, customer acquisition is not only a challenge, but it's a massive expense. So if you can build an insurance operation, distribution business without that expense, it's not a slight advantage in Google costs. It's not I bought, better ads on one network or another network on television. It is a straight up, that line item doesn't exist. You will win, and you deserve to win because of that. And so that's kind of item number one. And we've seen examples, and we can dive deeper into examples in other industries, specifically in financial services, where that has been proven true. Credit cards is the simplest example of that, where the airlines today dominate consumer credit cards, and that has nothing to do with credit cards.
Right.
And so we will see that in insurance and some of these businesses that we power their programs for in automotive, in real estate, and in financial services, we've got a much closer link to insurance than anybody even understands today. So that's kind of number one. Number two is that insurance companies historically have had and been encumbered by technology. And we are not only at the AI intersection of really a fundamental tectonic shift in things like you mentioned in the intro, customer service, ease of purchase, et cetera, but we have a bigger problem, which is that in other industries, you can also see if you do not start with a clean sheet of paper, it is way harder to adapt to a new paradigm. And I'll use automotive as the example. The most successful electric car makers, which I would argue going from internal combustion to electric motor, was a pretty big shift in car design and manufacturing and customer experience in the car. The folks that started with a clean sheet of paper created the best product. The folks that said, we're going to try and squeeze the car to be this new thing, but it's not clean sheet. We didn't fix the software right. We didn't make the, product fit this new paradigm. We tried to take our old thing and make it look like the new thing. It just didn't work great, right? And you can just look at all the incumbent car makers and you can just see it. It sticks out like a sore thumb. So as it relates to insurance and tech, what does Sure do? Well, we came to the realization that bolting on features to existing tech stacks was going to result in failure and poor customer experiences. And so we decided we were going to build the rails so that the most modern insurance experiences, whether that's for customer sales and interaction, whether that's for customer service or self-service or claims, we were going to build the end-to-end solution so that the lowest common denominator, that piece of software that was purchased 20 years ago, does not stop all the future progress because you can't replace it. And so the only way to do that is by creating a solution that you can say, we're the system of record and the connector between both ends of this problem or this solution that an insurance company wants to roll out. And therefore, we can do it for everybody. So I think those are our two big viewpoints that we've taken. But not only that, we've actually implemented.
Mm-hmm. So just picking up on the latter, what do digital insurance rails really mean in terms of maybe plain language? Is there a minimum set of capabilities a carrier or someone else who wants to operate in the insurance ecosystem needs in order to actually kind of run end to end and not just appear digital on the surface?
Yeah, I would say that if we start off with when you go do an e-commerce transaction, and that was a bit of my background was in payments, e-commerce, and stuff like that. What are we really selling here? We're really selling a PDF. We're tracking time and moving money, right? That is what a digital transaction for insurance looks like. And so if that transaction requires some asynchronous process, some process is interrupted, that is not straight through, that we are actually not doing digital insurance. You are simply replacing some other manual process that would have looked like a phone call, would have looked like a paper submission, and we're just saying instead of that, we're just changing the medium to be a online form. And our view is that a full transaction should be able to happen without a human involved. That's when it's digital insurance. When the customer can make a purchase, the payment happens right in that moment, and there is no follow-up. There's no, you now have to go do this other thing in order for this to be in effect. And so if it's not that, I wouldn't call it digital insurance. And what the front end looks like, that can be different. That's going to change, especially with AI and AI agents and how people search. I had a fascinating conversation with a client and prospect this past week where they commented on where they're searching for insurtech solutions and that they couldn't find certain vendors and they couldn't find information about certain things. And I just said, where are you searching for this stuff that you're not finding it? They're like, in ChatGPT. So we're already at that point where people are now just replacing in the enterprise, right? In their work, they're replacing ChatGPT with Google. We are moments away from consumers doing the same thing, right? Where they are just going to go and ask, hey, I want to buy this. I want to do this. I'm looking for the best solution for home insurance in Texas. Where do I go? And we're going to have to make that transaction happen inside those interfaces. And fortunately, we're positioned to do that at Sure.
Yeah, actually, that was going to be one of my questions, which is, you talked about different entities that own the customer relationship and their ability to embed insurance products if they'd like to. So I was going to ask you about the ChatGPTs and the Claudes and the Geminis of the world and kind of where you see that going and will they be the winners of the insurance distribution race?
Yeah, I mean, it's an interesting one. I don't think we know who's going to win it just yet. what we've tried to do in our business and our roadmap and our tech is we've tried to say that it doesn't matter. It's too early to place a bet. We should place lots of bets on all of those channels, but that the ultimate winner will be the true system of record. And so if you are the system of record for the insurance transaction and you've opened up your ecosystem like we did with our MCP and our APIs so that any AI tool can be plugged in, then it doesn't matter what the winner is, right? Because you might have one client that has a preference for using, one customer service, voice language, right? AI customer service. They might have a different tool for something else, and so the winner will be not the one that got there first. The winner will probably change a bunch of times, just given the pace of innovation. The winner will have to be the one that can actually be the reliable system of record, because all of this other stuff is the bolt-on, right? It's the extra parts on top. Now, that's what the customer may interact with, so it's super important. But if you didn't nail what your core system is, if you didn't get the engine right, if you didn't get the rails right, the other stuff won't work right, right?
So I'm curious, in your view, is there one ultimate system of record? And the reason I'm asking is, I've interviewed and attended events where, say one of the agency management systems, not only talks about being a system of record, but then also talks about evolving into a system of action and leveraging AI based on that. So are they one kind of system of record and you're another, or how do you see this all hooking together?
Yeah, very much. And I would say we're going to see disruption in the former, what you're talking about, the agency management system type systems of record, the same way we're going to see disruption in Salesforce's system of record, right? Where you have the CRM, you're trying to organize messy data, and you're trying to have workflows for people, which is different than being a system of record for machines. And when you're the system of record for machines, you're not trying to make it that a human is, intervening and it helps them do work and it, organizes messy things. We're talking about the true structured nature of insurance policies. If you've spent any time with agency management systems, you know that it's painful for a lot of agencies and agents, right? Because each carrier that gives them data does it slightly different. It's not normalized. They have to do a lot of cleanup. It's quite messy. And so we're going one layer deeper, one layer more foundational, which is the system of record for the actual policy, that there is no other, that is the official record of that policy existing. So more like a core policy administration system of record versus, hey, I want to organize my customers to know who to follow up with for renewals. What offers did I get? That looks a lot more like a CRM. And what we're talking about here is the actual transaction layer, kind of like at your bank, right? There is the core system, like a Jack Henry or an FIS that's tracking it. If you don't get that part right, you can't actually build the great experiences on top, which is fundamentally why those agency management systems, if they could be better, they would be better, but they're held back by what do they connect to.
And so who ultimately owns the customer relationship and the data in this scenario? And I mean, I'm curious about, consent permissions. Are you, using tokenization and things like that? So it's probably more than one question in there, but maybe we just start with, who owns the customer relationship and the data in this model?
Yeah, our model is pretty simple. We do not own the customer. We are helping other people build really big insurance companies. That's the idea. And so the best way I would frame it is your credit card says Visa on it or Mastercard on it, but you have a relationship with a different bank and you go buy products from every merchant, whether they're online or offline. Mastercard doesn't own the relationship with you. And so effectively, we see that there needs to exist a Mastercard or Visa model where they have taken all the friction out of this thing called using a credit card. They make it all work, but you have a relationship with, as a, insurer, like they're your bank, so to speak. You've chosen to go with them. You may have bought your insurance from somewhere else. Maybe you bought it from an agency. Maybe you bought it online. Maybe you bought it from ChatGPT or Claude or Gemini. That shouldn't matter. You are simply traversing Sure as the rails. So we're completely in the background to make that fully online transaction happen. And yes, the data does sit with us the same way it sits with AWS.
Got it. So when you're going and having these conversations with prospects like you were talking about, what metrics, quick wins, long-term wins, what are you discussing with them? Are you having conversations regarding existing pain points they have, or are you sort of trying to educate them on new behaviors or kind of the future of the industry and trying to get them to think differently?
Fortunately, these days, we've been doing this for a decade. People have reached the conclusion that insurance is going to have to be sold in a frictionless way online, and that distributing through brands like what we do, and with folks like Toyota and Zillow and Mastercard, et cetera, that they want to sell their product in those channels. They've gone through the pain and misery of trying to build their own technology. They've gone through the brain damage of trying to do partnerships and affinity relationships in a new way. And so they clearly see the need to be having that as a distribution channel. But for us, what we're now doing is we're just finding partners who have failed and are now realizing, hey, we have the conviction around this distribution. However, we can't keep failing at it, because if we fail at it time and time again, we're going to get beaten by our competitors. And so we're there and saying, our best customers have tried everything. They've tried doing a direct carrier partnership with the strategic partnerships group at, you choose your carrier. They've tried that. It failed. They've tried doing quote comparison or aggregators, and it doesn't convert because they don't control the customer experience. They don't have a pathway to control the customer experience. And so when they've seen it but failed, and they've seen the bright light or the green shoot of it, but it converts at less than 1%. I mean, if you round down, it's 0% conversion. And then we can show them the hard data and say, guys, we're converting at a minimum your customers at 20 minimum. Like if it's not converting 20% of these customers, it's a failure. And so that is not just a, hey, we made it cheaper. Hey, we made it faster. That is a fundamental change to the business, because it goes from a good idea to a truly billion-dollar business for them, and they can see that pathway. And so we don't have to evangelize the idea any longer. The idea has, seeded in people's brains. Now it's just to show them that there's a different way, and it requires a little bit of investment, but the long-term payoff is so much better than just giving their customers, to your prior question, giving their customers to somebody else, giving their data to somebody else. And now they can keep their customers, keep their data, and convert at 20 or 30 times more. All of a sudden, all the pro formas, all the forecasts that they did to get this idea of insurance greenlit, it all now works Whereas before it worked on paper, but it didn't deliver. And so those are some of our, our best customers these days.
So can you share a little bit more about your MCP announcement? Because I'm not sure everybody who listens to this knows what Model Context Protocol is. And, I'm curious where your core technology had to evolve to in order to be comfortable making an announcement like that.
Yeah, well, we had a bit of an advantage to being first. And I think we were first by a year ahead of, even some of the, let's call it other insurtechs that provide systems and whatnot. And that was just that we have built truly a platform that was never designed to be on-prem. It was always a cloud-based SaaS platform. And we were very early. I did my graduate studies in AI a decade ago. And so have always been on the frontier of what has been happening in that space. And, as the, MCP concept evolved away from AI, APIs for other programs to use, humans to use, and we've gotten into this world where LLMs need to be able to interface with core systems and data. We just decided we're going to go open it up and see what happens. And I think we'll see some new things from us here on the horizon about how do we actually take that, let's call it open door, or the pipes to a system like ours and really expose it to consumers in a unique way, whether that's direct integrations with some of the consumer-facing LLMs like ChatGPT, or with some of our large customers who want to roll out their own customer support tools, their own self-service tools, where we're not prescribing what they do. They can go choose their vendor of choice for customer service, for voice assistant, for dialing, for you name it. And we don't have to spend a bunch of R&D time, and they don't have to worry that they're going to buy another piece of software that's incompatible with Sure. And that starts to look a lot less like we're a piece of software, and it looks a lot more like we're an ecosystem. And that's our ultimate goal, is the ecosystem that insurance has been built on never actually formed. Forget that it's rotten and antiquated. It doesn't really exist. When you really get into the weeds of it, the ecosystem is exchanging Accord files. That's not an ecosystem. That's just a different way of faxing,
Right.
And so we've got to spend the time and effort and really have the leadership about what's possible for insurance and data in today's world, so that consumers can actually spend less time on insurance. I think that should resonate with every person you meet that, asks you what you do and who do you go recruit for. And it should just be like, our goal is for consumers to spend less time on insurance. Well, how are we going to do that? It's not by showing them more quotes. It's not by having it be painful for their agents, that the agents can only, help that customer 3-4 days before renewal because they're so overwhelmed. It's that it should just be automatic.
So where's the Sure going next? I mean, is there one particular bet you'd make in terms of what'll matter most in the next 12 to 18 months?
Yeah, I mean, the bet I'm making every day is on our team. That's probably the easiest bet to make. What else happens? Who knows? But for us, it's become very clear that because of the success of some of the brand programs we do in, like I said, automotive and real estate and commercial insurance, we're finding that our biggest Fortune 100 brand partners are looking for more control over their insurance programs. At the same time, that the big insurance companies are trying to take control away from them and trying to say, we, insurance company, we're the ones that need to grow. We want to own the customer. We want to cross-sell. We want to send your customers to our agents. At that same moment, the biggest growth vector for insurance, those brands are saying, no, we want to control more of it. It has been a poor experience. It isn't working. It's not helping us hit our KPIs. So where I see that going is we're going to help our biggest clients basically help them form new insurance companies. It's just so obvious because they have such an advantage. They have a technology advantage. They have an expense advantage, and they have a customer acquisition advantage. And so if they can therefore control their own insurance company, which clearly people can start insurance companies, really hard to start a car company and get people to buy those cars, really hard to start a real estate company and get people to go there. We're going to go do that over the next several years, and we've got some of those in the works, and it's going to be pretty exciting. And I think the market will respond in an overwhelmingly positive way, but almost like in a, oh my gosh, it was so obvious the whole time that this should happen. And those are the light bulb moments where people are like, of course, this is obvious. Of course.
So I mean, will these be built under MGA models with, fronting carriers and reinsurance partners, or will these be actual carriers? Do you envision the carriers, remaining as manufacturers? Like, how do you see it actually evolving in practice?
Yeah, different than MGAs, because MGAs, as you know, right, they're going after a specific niche. They're relying on someone else's balance sheet. They're usually with a fronter. And what we're trying to solve for is permanence. And there's no horizon in which Amazon isn't selling products, right? So having an MGA doesn't really solve that problem for them, right? It might solve it short term, but eventually a rug will be pulled. That's just the nature of being dependent on someone else. So when we're talking about our partners, we're talking about folks that they're in all markets. They are going to be in those markets forever, until they get bought or go out of business. Insurance is not an experiment for them, right? It's not, hey, what could we do if we had insurance? It's true commitment to building an insurance business. And so it looks a lot more permanent than an MGA. And we're excited about that challenge. And fortunately, we've, with capital partners, already got the capital secured for those types of projects. And you're just seeing the response of people wanting to go after the market that we're, in essence, creating with some pretty big checks for insurance risk and those types of returns, and not have to go through an insurance company to get that exposure, whether it's reinsurance, but an insurance company that has disadvantages, 40,000, 60,000 employees, and they can go skip that entire step of intermediaries and wholesalers and retailers and just say, we want exposure to home insurance or auto insurance. Why don't we just go straight to the people that already have the customers? Got
it. All right, Wayne, anything else we haven't covered that you'd like to touch on today before we wrap up?
No, I think 2026 is going to be a monumental year for insurance and insurtech. And we'll see and watch the show of what is AI going to do in insurance. And it's going to take a whole lot longer than we think. Everybody thinks it's going to transform stuff in 1 year. It's probably going to take 10 years. But in 10 years, insurance is going to look very different. And right now, we're in the trenches laying that foundation because we got tired of waiting for everybody. And so we might as well just go do it. And that's probably the best way to view what's going to happen in 26.
And for those who like, more information, contact you? Email address, website, LinkedIn? What's the best place to find out more about Sure?
Absolutely. Find us online, sureapp.com, sureapp.com. And you can follow me on X or on LinkedIn. And on X, I've actually started to produce some content around insurance and startups and entrepreneurship from the trenches. And if people are interested in, the hard decisions you have to make around your team and talent, or your technology, or your partners, or your go-to-market, and they're interested in that, I would love for folks to follow me and interact.
All right, great. Well, Wayne Slavin, CEO and co-founder at Sure, thanks so much for joining me on the InsurTech Leadership Podcast.